Good morning, everybody. If you can make sure to like the video, I'll start the live stream here in just a second. Hope you guys are doing well. Hope you had a good weekend. I'll play a little bit more music and then we'll get into the charts. All right. Good morning, everybody. Good morning. I'm going to put some charts on the screen here. Hope you had a good weekend. Let me know if you can see the screen here. Good morning, Christian, Muhammad, Christopher, Marco, Rusta, Harold, Ozzy, Romer, Elite, Jeremiah. Awesome. Thank you, guys. I appreciate it. Did you guys have a good weekend? Was it useful? Did you make use of your time? I'm sure a lot of you were watching the Super Bowl. If you noticed, I did not. Hassan, good morning. Wolf, P-Trader, good morning. Alright, let me put on, I want my own music in here. Ghost in the Machine, good morning. If you guys can just like the video, I appreciate it. Get those likes up. Rooster, yeah. Flatwood. Yeah, I stopped watching the Super Bowl a long time ago. I've never been interested in watching football. I mean, I played football at a very high level throughout high school. It's All-American, All-State, but I don't know, something about it, just watching it is, I don't know. It's a different discussion for a different day. You never get notifications on my stream? Yeah, somebody asked me about creating a schedule, but I mean, I go live every single day at the same time, so nothing really ever changes. What position? I was a defensive end. Yeah, I was in some All-American combines and All-State. Unfortunately, I had terrible grades, and for my my position, I'm 6'2", but for a defensive end, if you really want to go, big in college football or pro, you need to be 6'5" at least. I'm happy I didn't end up playing, because I went to college and I found trading, so I guess everything works out in the end. All right, let's dig into this week. I don't want to get super distracted off the bat with the chat already. Can you just like the video? I appreciate it. You guys can see the screen, right? You can see it. Let me make sure OBS is... Yeah, okay. Going off of if you watched the weekly forecast yesterday, if you didn't, it's fine. But just a quick recap on everything. Dollar index is really what I'm looking at this week. Bonds and yields are obviously a huge thing as well. And I think I really want to make this clear for all of you who are trying to understand. Bonds and yields in a dollar index, those relationships are in sync with each other. Indices are the only one that are out of sync. So those are decoupled away from dollar index, bonds, and yields. All of those are, in terms of the relationships and the correlation, they're all fine. they're all doing what they're supposed to be doing in terms of correlation. Indices are just doing something completely different. And that's the reason why I've been very hands-off, not pushing the market. Dollar index has not been providing a whole ton of clarity. I would like dollar index to continue to rise or do something where it would move the indices in a particular direction and it would be in sync with dollar index. Tomorrow we have CPI, so you have to keep that in your mind. Is we have CPI tomorrow, which that can create on a Monday or the day before. That can create seek and destroy profiles, consolidation. It can create lower probability conditions. So I don't have high expectations going into today. Neither should you. I would rather wait for something like tomorrow where we have CPI, that plays out, and I can get a better read on the entire week. So as far as dollar index, I would like to see this thing continue to rise. And what does that mean for index futures? That would mean those would go lower. So we have to keep that in the back of our mind. If that's what I'm anticipating for dollar index, then I have to be anticipating the other way for index futures. So if you look at the daily time frame on dollar, small inefficiency in here, and I would rather this be the last kind of point of interest, to be honest with you. I talked about yesterday, if anything, I don't really want to see us dig into that down close candle, and I'd like for this thing to expand higher. To me, this looks like a market maker buy model. If I had to gun in my head, that's what overall in the next coming weeks and months, that's what I could see it happening, is us expanding towards the buy side here. So if I can get that, then that would mean that the index futures would be going off lower. I'd be looking for lower prices. So you have to keep this as a forefront. I know it hasn't been that useful this year so far because we've been in consolidation and it's been difficult to utilize it. But when it is, and you can utilize it, it's very, very fun and it's easy. So as far as NQ, again, we're at all-time highs. So it's the reason why I'm leaning on intermarket relationships so heavily is because when you're at all-time highs, I don't have anywhere else to look at. I don't have any liquidity. I don't have any efficiencies. I don't have anything else to work with. So I lean on intermarket relationships to give me some type of direction, give me some type of clarity, because I can utilize that for a bias and for a narrative. If intermarket relationships, like they've been doing, are decoupled, then it makes it even more difficult because I don't know where NQ is trying to lead. I don't know if it's trying to go higher, lower, etc. So I would just be careful, especially going into today. I wouldn't be super eager to be trading, super eager to be pushing price. I would just be waiting, at least for tomorrow with CPI to play out. So the daily time frame in here, again, if you go all the way out to the weekly, you can obviously get a view of what we've done. If you guys can like the video, I'd appreciate it. I'm not sure last week on Friday if if I got shadow banned. I kind of went into a little tinfoil discussion, and I'm curious to see if YouTube has decided to shadow ban me. I didn't say the C word, so we'll see. So inversion fair value gap here that we've utilized. Dip down into fair value gap here, expanded higher. Technically, if I'm not using intermarket relationships, I'm not utilizing anything. I don't see this thing just falling off or retracing currently. There's just too little information. I don't know. I don't know, right? So we could expand higher. We could, drop lower. But technically, I don't see this moving off lower just yet. That's the reason why I use intermarket relationships, because it helps me determine biases and narratives when technically I can't see anything. So, Roosta, I appreciate that. Yeah, I know there's a lot of people that think the same way, and I mean, it's difficult in this day and age to talk about certain stuff. They censor you, they shadow ban you. I mean, those type of things are pretty key signals to what they obviously are trying to hide. So, we just got into the open here, so let me dig down into some lower time frames. Inefficiency here on the 4-hour. I mentioned this last night. It's kind of the only thing I'm working with. So just keep that in mind today. If I was going to do anything today, it would probably be shorting. One-hour inefficiency here. So it could reach down into a discount today. But again, I'm not eager to press a button. I'm not eager to do anything. With CPI ahead of us, it's fairly a good idea to steer clear and not touch today. But if something happened where I could clearly see a draw on liquidity, I could clearly see price, then it might be a different story. We have this rejection block here, if you're wondering what we're... So this last up close candle, that's your rejection block here. Sell side liquidity resting from the open this low there. So on the 1 hour, if we want to move lower, that sell side liquidity pool and that discount inefficiency here would be probably the best option. Got my hat on now. Yeah, I honestly forgot that YouTube was pretty heavily on that. So let's look at the 15-minute order flow in here. We have a new week opening gap there. Not super huge. The sell side liquidity resting underneath this low from the open. If you guys can like the video, I'd appreciate it. Again, remember, we're still waiting for the silver bullet. I'm in no rush. What is a Monday? Like, what is the mindset of if you were to place yourself in a quote-unquote retail trader? What is that mindset? Well, if you're fairly new to the market and you're, just got into this, you're eager to do something, right? So what is that mindset like on a Monday? Is what do you think that they're going to try to do to the market? Well, they're going to try to manipulate it, make it easy to fall for a short or a long. It's just the mindset of going into a Monday rushing like everybody else, right? You're following that herd mentality. Is the market opened up, everybody's rushing to get in here, they're rushing to do something. So for me, I'm trying to do the opposite. I talk about that on a Monday a lot, is just sitting still, being patient, because Mondays can be very low probability in and of itself. With no news event drivers and CPI ahead of you, that creates even more of a kind of predicament. So for me, I'm watching how this opens up and what people are trying to do, right? I mean, they're probably trying to chase this long, short, right off the open. I'm not trying to do anything. Will Conway, good to see you in here. Oki. Let's mark out the RTH gap and see what we have. I don't think we really have one. Wow. Look at that. Isn't that interesting? Isn't that really interesting? We opened up exactly where we closed on Friday. Very interesting, isn't it? Very, very interesting. A lot of buy side resting above price, so we'll see. Again, I have no opinion, I have no bias. I'm just watching and observing for the most part today, unless I saw something where I was like, okay, I'm willing to take the risk, I'm willing to get into the market. Welcome everybody who's just joining in. Hope you had a good weekend. I know I did. So look at the overnight highs in here. To me, that's pretty subjected to get taken out, to be honest with you. And if you look at last week, and even Friday was such a good example too. I mean, and I wanted to really make this a point in the weekly forecast, is when you're utilizing intermarket relationships, you're utilizing SMT. That's part of your rules. That's part of your rule set, is when things are not aligning, and they don't always have to be a perfect relationship, but especially if you looked at last week with YM being so decoupled away from ES and NQ, and even ES really wasn't super in sync. You're going to see these moves happening like Friday, where you saw these large expansions. it's not that I can't see that happening. I can't see that there was plenty of models on Friday where I could have entered into the market. But due to intermarket relationships and due to a decoupled market, I'm disqualifying that entry pattern, even though I see it. And this is what I meant to say yesterday, is just because the market's moving, just because your model may have printed, that doesn't automatically qualify it, nor does that mean you should be upset that you missed it. Because utilizing, like I mentioned over and over again, intermarket relationships, SMT, decoupled markets, utilizing that's going to help you, on the contrary, to stay out of potential losses, stay out of conditions that are unfavorable. And that's how, if you watched me for a period of time now, you've seen me stay out of conditions that are unfavorable, choppy, consolidational, and that's due to the rule set that I used just on the same thing on Friday, where unfortunately I had to sit out of that market where it did move and there was some models. So there's always pros and cons to the rule sets and the things you have in place, but I'm not upset that price moved and significantly and I wasn't a part of it, because that's not part of my rule set. So I really want to make that clear. I just didn't really have time. Didn't we hit the daily, weekly CE of the wick, or does that not count? That's a lot of words there. I mean, if you're talking about this wick in particular, I mean, yeah, of course, wicks will act as gaps. Not something I'm really keying off of, though, necessarily. This is the current new week opening gap, so that's where we opened up yesterday. And you could take out internal sell side liquidity. Why is that internal sell side? Well, if you look at this dealing range low to that high, that's a bullish dealing range. It's dropping down into a discount, taking out internal. If you're ever wondering what a good 2022 model is, well, a good 2022 model, particularly, you're taking out external sell side or buy side. And to refine it even more, if you're taking out a previous week high, you're taking out a previous day low in a 2022 model, that makes it a little bit higher probability in my eyes. So anytime you're taking out external liquidity on that model, it's a good high probability model. In general, you're taking out external liquidity. If you're just joining in, if you can like the video. Let's drop down into a 1 minute here. So inefficiency there. Resting right on that new week opening gap. Let's dig down into a 15-minute here. Hello, JP. Hope you're doing well. Will Conway, yep. And like I said, that's part of like daily logs. Like I'll just drop little gems and things that just come to my mind. That's not something that I just make a video over. Like it's just something that like pops in my head. I'm like, oh yeah, I forgot. That's, you know, it's a good point to make, a good little gem to drop. I'm not saying that even if there's external liquidity and that's rated, that's 100% win rate. Like no, but it does create a little bit higher probability 2022 model. You need to know external and internal liquidity and where you're at. But particularly if you focus on previous week highs and previous week or previous day lows and highs as well, that's going to help you. Mantis, good to see you in here. Let's cross our fingers here. Hopefully my internet does not give me much of a hassle today. But it looks like it is, so bear with me. Sometimes it says poor on my end, but it's actually good on your guys', so just let me know if anything starts to go haywire. 50% win rate with a 1 to 2 RR is enough to make money in the markets. Most definitely. You don't even need to have a high. You could have a 40% win rate. As long as you have a good risk management, you have a good plan in place, you can do very well. So this is probably, if this thing does end up falling off lower, it's a really good example of disregarding a 2022 model, in my opinion. Because if you're taking out internal sell side, what does that mean? That means that there's some external still left. So this low down here, there's still sell side residing down here. And if you're taking out internal inside of a choppy market, that can lead to you basically taking loss, because inside of this range, you're just taking out internal sell side liquidity. It doesn't mean that it's automatically going to reverse and go higher. So it's also time. Time is going to keep you out of certain stupid trades and things that you're going to take. Like for me, I'm not going to trade the first 30-minute window on a Monday due to this condition right here. My old self would have most definitely have seen this. Saw sell side. Okay, this is the 2022 model. This is it. Sell side taken. Displacement higher. Shift in market structure. Fair value gap. Buy side liquidity. Okay, I go long. I'm stopped out. Why is that? Well, there's a lot of reasons to that, but particularly, you took out internal sell side, which is not the highest probability. You're trading within the first 10-minute range on a Monday, ahead of CPI with a decoupled market. So if you're not looking at the things that make things low probability and you just only look at your model on a 1-minute time frame, you're going to get stopped out a lot because you're not paying attention to certain factors. And even if this thing went higher, I still wouldn't care. It doesn't mean that my rules are invalid. It protects me a lot. I play defense, if you noticed. I play defense a lot. I'm very rarely playing offense, because when I do see the offensive play, I'm playing very hard. I'm playing very aggressive. And you'll see me do that. I mentioned this yesterday. If things loosen up and things become fairly easier to read in terms of intermarket relationships and everything else, that's when you can pyramid. That's when you could risk a little bit more, because I'm more confident in the market. I can see where price is really trying to go. If I'm in a low resistance liquidity, scenario, man, I know those like the back of my hand. If I keep getting them, I'm going to press very hard. But that takes skill to understand when you should not be pressing very very hard and sitting still. These type of environments, like you've seen me do in the last 2 weeks. Tom, good morning. Hope you're doing well. Awesome to hear. Mods DXY is just consolidating, rally up, and then repeat. Yeah. So I mean, that's a good point. Is understanding when dollar index is not moving, it's consolidating. It's a good idea to sit still for if you're trading indices. Hypothetically, you would have wanted it. I mean, it just would have been a better scenario. Because what does that do? If you're taking out internal sell side liquidity, that's leaving external at this low here and at that low there. But if we took out this low, then there's no other sell side liquidity that's resting on the external. So it creates a little bit higher probability. Excuse me. Felipe, because everybody who follows ICT uses shitty microphones. Be honest with you, I don't know if this sounds good or bad. Be honest with you, I don't really care. That's what you get. This would be one setup for life, sweep of London lows, target London highs. Yep. I love the one trading setup for life, which I took it off because I put some stupid thing on here. So I want to put that back on. One trading setup for life is a phenomenal model. Can I explain that again? Are you talking about particularly the internal and external? Yeah, I said I talk a lot, so sometimes I forget what I was even talking about. think I could put music back on. Let me see. Again, I mean, external and internal, it is fractal. So it's the way you look at the market. But if I'm just looking at a 15-minute time frame, this low is external, that high is external, that high is external. All of this inside of this dealing range, the way to look at external and internal is to look at dealing ranges and the time frame you're on. But if I'm taking out internal sell side, that's going to leave external liquidity. So even though I took out internal here, there's still external underneath that low there, and there's still external over here. Now, if I took out, imagine on this run, we took out this low here. Then what does that leave? That doesn't leave any other external to the left of you. It just depends the way you look at external and internal. Yeah, it's not like a deal breaker. It's not a huge hidden gem, but it's just something I personally have studied. The one trading setup for life, if you go on ICT's YouTube channel, is something that I think a lot of people overlooked. And I even overlooked it at first because I was like, oh, this is too easy. But then if you really studied it, which I can put the indicator on, it really opened up my eyes. Really what it's describing is you're looking at what he's saying in that is if he had to trade one model, is he's looking at previous session highs and lows. And think about that for a second. Every single session has highs and lows to it. And what does that mean? That has liquidity around each session, high and low. So if I'm able to utilize that to my advantage, is understanding, all right, this can work with the people that just, they can't understand narrative. And it's fine if you don't. I would highly suggest you work on it. But if you don't understand narrative, you don't understand bias, you don't understand higher time frame, then look at previous session highs and lows. And you use that as an intraday draw on liquidity. You utilize that for intraday bias. And I'll put it on here to see if I can. I used to have it. I may have to find it again. I don't think this is the one. I don't know if this is the right indicator or not, so excuse me. I may have to find a different one, and I used to have it on. I just deleted it for some reason. I'll have to find it. If we could find one, find the one that highlights London session highs, Asian session highs and lows, New York session highs and lows. Because again, if you're able to utilize that, you're utilizing liquidity. Every single session has highs and lows to it, right? So that means that there's liquidity surrounding every single previous session highs and lows. So you can use that as an intraday draw on liquidity. You can utilize that for your bias, your trades. It's a very good model. It went over a lot of people's heads, I think, because it sounded too simplistic. But for me, I was like, wow, that's pretty amazing. So you can see here on the flip side, again, we're taking out internal buy side liquidity. You're taking out internal buy side here. So from this dealing range high down to the low that we just made on the open, everything inside of that is internal. Right? That's external, that high, that's external low. Everything inside of that is internal. So all we did was take out internal buy side liquidity. It can be a lower probability model, but not always. If you're on side with the narrative and the bias, internal models are fine. It's just they can be a little bit harder to utilize, especially for a newer student. Focusing on external can be a little bit easier for you. Thank you guys, I appreciate that. I will put that on right now. ICT session. Wait. Oh, there we go. Wait, what'd that just ask me? Ah, damn it. ICT sessions _1. What'd that just ask me? Confirm inputs? Oh man, UTC-5. Why does it say GM? Sure. Well, where is it going? Oh, here we go. Oh, it's on this one. I see. I'm going to have to adjust these. But this indicator is really good. If you look at London session highs and lows, even previous New York session highs and lows, and you look at, if you've taken out London session highs and you're rolling into New York, if I've already taken out London session highs, or let's say during New York, you take out London session highs right off the open, then it's the same thing as like a 2022 model. If you take out London session highs right off the open, then you should be looking at London session lows. You compare it with your narrative and whatever you're looking at that day. It's a fantastic model, man. I utilized it for a long time. I still do, but I just particularly to a naked eye, I can see where London session was, where the highs were, where the lows were. But I'll pop that indicator on. That way we can utilize it in a session. I can try to teach all of you. Mikkel, thank you. Yeah, Lux Algo, he's got some really good indicators. Any giveaways this week? I'm not sure just yet. I'll have to talk with the team. Hope you guys enjoyed that last week as well. Hopefully this week, if I do giveaways or in the future, hopefully it's going to be a little bit more. Again, if you guys have been seeing the prop firm space as far as indices, or not indices, Forex prop firms and indices prop firms, it's getting wild out there. I would protect yourself. I'd be very careful, especially if you're in the U.S. Especially. Yeah, I'm not really interested in doing anything currently. Yeah, exactly, Tom. I mean, over time, it's just I particularly wouldn't even have annotations on my chart if it wasn't for live streaming, to be honest with you. Maybe a couple lines, but for the most part, I mean, once you become super experienced, I mean, everything's just super pattern recognition. So we're resting inside of this inversion fair value gap here. So what did we do? I mean, on two sides of the story, right? There's always two sides of the story. A, we've taken out internal sell side, displaced higher. And some people could have seen this as going long, could have seen a breaker, order block, fair value gap. On the contrary, you could have seen price retrace up into a premium, taking out buy side, dropping lower. Now we're utilizing the inversion. So this is where, to me, narrative would come into standpoint and come into useful help. Same with intermarket relationships, because there's going to be two models that form, and you need to pick, okay, which one's the valid one. Well, how do I know that? Well, you're utilizing higher time frame narrative, and you're utilizing intermarket relationships to help you determine that. Because otherwise, you're just driving blindly. You're just driving. You can see two models, and you'd be like, I don't know which one's valid. I think time really, really helps. If you've noticed, I'm not doing anything because we're not even in the silver bullet yet. So time's going to protect you from a lot of losses. If you continuously keep taking losses, study the first 30 minutes. You're probably taking a lot of losses in the first 30 minutes. So I would advise you not to trade that. Sit still. Don't do anything. Don't be tempted. The market's not going anywhere. You don't need to be fearful. Just chill out. Trying to fool newbies. You ain't fooling no one, dummy. I'm not sure what that means. What's going on in the prop firm space in the US these days? There's just a lot of things going on in terms of MetaTrader being taken out and some other things. So I would just read up on it, do your education, due diligence. What's up, Ryan? Hope you're doing well. Hope you had a good weekend. Yeah, I particularly don't know what that comment is. Yeah, if you look at the higher time frames, what's really the narrative and the bias? Well, we're still maintaining higher prices, so I had a good weekend, restful. To be honest with you, I was working a lot on. I have this beginner course. I'm actually really proud of and I'm happy about. I can't wait to release it. I think it'll be really useful for those who are just coming into trading. I mean, I made it especially for a family member who's just getting into trading, and I try to make it as simplistic as possible. To be honest with you, it was one of the harder things I've had to create because putting myself back in the shoes of somebody with no experience, it was difficult. I'd explain what a candlestick was. I'd explain time frames. It's and I think that's a question somebody asked about time frames in this session. Um, for you to ask that, more or less as experience. I understand the question, but for time frames, you just have to keep going through the time frames and see how they all work together. The market is fractal. There's a few things that you can work on, but if your style is more intraday, focus on a 1 hour in the lower time frames, but they all do work together. It's one big puzzle piece that they all do work and they intertwine together. So, new week opening gap. It's from the open to close. Oh, what Pikachu? How do we get on that? Again, I'm not interested in doing anything. I think a lot of people could be getting chopped up very easily in here. You see higher prices, see lower. Mike, good to hear. Good to see you in here. I see that I probably have a lot more viewers because she hasn't on. Your silver bullet knowledge. Yeah, if you stick with me, you're gonna start to learn a lot of things. That's all I'm gonna say. The reason why I like the silver bullet so much and I preach it is, again, if you were to participate in this 30-minute range, would you be very confident in one side or the other? I particularly wouldn't be. I could see it both ways right now. I see a 2022 model on both sides of the board. The only thing that would counteract the bearish is what's the narrative. The higher time frame is the parent, so it's going to oversede. It's going to supersede any other lower time frame entry. So if the narrative is bullish, then it's going to run over any bearish PD arrays. It's going to disqualify any bearish setups. So you have to keep that in mind. It's the reason why I preach narrative. It's the reason why I preach intermarket relationships, SMT, because all of those things are going to help you determine which entry pattern is valid, which PD array is valid. CJ, what's a high probability fair value gap? Well, are you paying attention to narrative? Are you paying attention to SMT, intermarket relationships? All those things, if you combine them, that's what creates a high probability fair value gap. Or an order block, a breaker. Replace it with whatever you like. Nico, I appreciate that. Yeah, and I think displaying patience and for a more experienced person, I mean, if you just simply sit on your hands for a lot of the times, you're going to save yourself a lot of money. You're going to save yourself a lot of mental capital. What's the number one thing I preach about? Mental capital. So I'm not trying to spend that on a Monday morning right off the open. I'm not trying to dig myself into a hole on Monday and then dig myself out of it through the rest of the week, mentally and my actual capital. So there's two sides of that, right? And even if this thing was to go higher, I wouldn't be fearful at all. I know that I could enter into the market if I wanted to. We have so many tools in our disposal from ICT where you can enter in at basically any given point, as long as it's not at, okay. Let me rewind. But if a move has already happened, there's probably a point where you can get into the move and still catch a little bit pound of flesh and get what you need. You don't need a lot to make a living in this. I would highly suggest, obviously, if you're looking at this from a career standpoint and making this your livelihood, you're going to need a lot of capital. You're going to need a lot, and you're going to need a lot of other people's capital to really sustain it long term. That's my personal opinion. Because if you have a large amount of capital, you don't need to do a lot. You need to do very little to make a good amount of money. I mean, you could be making 1 to 2% a month, which if you have $1 million account, that's 1 to 2% a month. You're making $10,000 to $20,000 a month. You're doing next to nothing. You're not pushing so hard. I mean, I think all of you could live very well, regardless of where you're at, on $10,000 to $20,000 a month. Gary, I appreciate that. Thank you very much. So, particularly, I don't have a bias in here. What are we doing? We're just in a range-bound condition. If you observe your SMT chart, again, YM has been very decoupled the last, I'd say even week or 2 weeks during the session. It's just completely doing something different, which it's a huge red flag to me. When it's doing something different than ES and NQ, that's a decoupled market, meaning that I should be aware of consolidation, seek and destroy, or just unfavorable conditions. So look at where YM's trading right now. We're trading off higher while NQ and ES are trading lower. So you have to be aware of that. Unless they started to move in sync, then I would find it a little bit higher probability. Now let's take a look at, again, if you're new here, I'll probably mention some charts and things like SMT dollar index. I have multiple monitors, so I'm paying attention to a lot of different things. If I draw your attention towards something, try to look it up on your own, whatever computer or laptop. So like right now I'm looking at dollar index. This week, I favor upside on dollar. So if I do favor that on dollar, that would put me at a standstill to push NQ higher, especially with NQ being at all-time highs. So I'm very weary of that going into this week. Is, well, if dollar wants to move higher and NQ's at all-time highs, that alone would make me weary to push price. When things are inside of a very high premium with very little retracements, it makes it difficult to want to push something, right? Because you know at one point or another, there will be a retracement. There will be some run on sell stops at one point or the other. Real money. Yeah, I mean, it's a very true reality. But if you can get to a point where you have a lot of capital, man, you don't need to do a lot. I know even me as a younger student, when I first started out, I mean, prop firms weren't even a thing when I first started. You know, I was working a job, putting, $1,000, $2,000 into an account, and everybody back then was trying to flip, 1,000 to 10,000 to 100,000. That's like, do you think about the percentage you're trying to do? You're trying to do thousands, thousands in percent. I mean, that's a very difficult task to do. But if you just do 1 to 2% on a large amount of capital, I mean, man, you're sitting good. You don't need to do a lot. It takes a lot of pressure off of you. That's a great quote. You can do nothing and come out handsomely profitable. Yeah, I mean, even ICT, if you look at what he's doing, he's in the Robbins Cup. How many trades has he placed? He's placed 2 trades. And he even spoke to us this morning. He said, I don't find this a favorable condition to be in right now. So if our own mentor's saying that, I'm going to take that as a piece of advice to probably sit still, not do a whole lot. Exactly, Tom. Yeah, I think that's, you have to, each goal that you have is, there's always going to be a bigger mountain. So you have to place your focus on something that is obviously realistic to you in that time. Just quitting your job or just paying off a small monthly expense at first. That's a great goal to have. Just paying a phone bill, paying a insurance, paying your monthly car note. Then you move on to your mortgage. If you can do that, Okay, can I replace half of my income that I'm working at this job right now? Okay, if I next mountain, can I replace my full-time income? Okay, after that, can I really save up enough money to have a good, net reserve, quit my job, be able to do this full time and not worry? So the goalpost is always going to move. And for me, you set it low enough to where you're motivated by it. To me, if you set a goal of, let me make $100 million, I'm probably not going to be motivated because I don't find that super realistic. As we trade off lower here, we're still, look at the new week opening gap, inversion, respecting that. I mean, gun to my head, I feel as if this thing's going to trade lower. But again, that's assumptions. I don't have enough information in here to make a decision, nor do I really care, even if it traded off lower. To me, I'm more or less just tape reading today. $10 consistently is amazing in my opinion. I mean, yeah, even if you're able to practice on a, let's say, $100 account, $1,000 account, and you're able to do 1 to 2%, it may only be $10. But if you can do that consistently, I mean, the only thing that's going to change when you move to $1 million is the money. But if you just take your focus off the money and just go, okay, I'm focused on percentage. I mean, to me, money's never been a huge issue for me, especially as you move up in accounts. I mean, for me, I've always focused on percentage. I mean, I don't really particularly care. Like, I don't get super FOMO'd or have a lot of emotions that I'm up 1,000 or down 1,000. To me, I'm just looking at percentage. I'm like, okay, I'm down 1%. It makes no difference to me. I don't think it should make a difference for all of you. If you do get influenced by it, I mean, most trading platforms have an option to where you can just click the money off and just look at points. But I've never been super influenced by the money flickering, to be honest. Do you use a trade copier when you find the right setup? Yeah, I mean, if I'm trading for the most part, I'll use a trade copier. Where do you find reliable news about the prop firm space? I think there's a couple websites out there that do reviews. Just do your own due diligence. That's the best. That's the best reliable news. Mike, yeah. I mean, again, I talk about Mondays being kind of the retail, like, let me chase, let me do something, let me get some constant action. Think about it in a gambler. They've been cut off for a day and a half, 2 days, and they're fiending to get back into this market and do something. As a professional analyst, I'm not eager to do anything. Why is New York always so choppy? Again, that's the profile. If you paid attention to what I've been stating for the last several weeks, is if you look at intermarket relationships, you look at the SMT, you look at the decoupled, really YM, that's going to tell you that, yeah, price is probably going to be choppy. And for the most part, the first 30-minute range is a lot of chop. It's the reason why waiting for the silver bullet is higher probability. There's a lot of things that can protect you away from being in choppy markets. And particularly as far as what I've traded indexes, there's a lot of chop. There's a lot of range-bound conditions in index futures. So you're going to have to get used to it. It's not fun. I'm not saying I enjoy it, but I've gotten used to it over the years with index futures. It's a lot of range-bound days. Do you ever consider trading oil? Yeah, I actually just looked at oil before this. The narrative, as far as higher time frames, I mean, that thing is weird, and I've never really traded it. So if I don't have experience in it, then I don't know how it moves. I don't know the feeling of it. I would have to paper trade it for a couple weeks and get used to it. Do I use the 1 hour chart? I use every single time frame. Especially if you stick with me, Mike. I know you're newer here. I use all the time frames. I particularly put a lot of emphasis on the weekly, the daily, the monthly, because that's where your narrative is deriving from. Narrative is what price is trying to do overall and what it's trying to seek. And I place a lot of attention on placing your trades that fit within a narrative. Because for me, doing that protects you a lot from losses. If you stand on one side and say, you know what, I'm not electing to go short today, I'm only electing to go long, then you only pick long setups. But if you're just trading intraday bias, you don't understand bias or narrative, then you're getting pulled in every single direction. You're going, oh, it's long, no, it's now short. Oh, it's long, now it's short. But if you pay attention to narrative, you pay attention to intermarket relationships, SMT, it's going to help you weed out all of those bad setups, and you're able to sit on one side and say, you know what, I'm only trading this. I'm only going long today. If I don't get it, then it is what it is. Till I detached myself from the outcome, it was making it more difficult than it needed mentally placing on this. Yep. I mean, this stuff's hard enough, man. I mean, it's the reason why I place a lot of emphasis on psychology and talking you guys through a lot of things, because this is a lot, man. It's not easy. This is not easy by any means. And staying out of conditions, something like this is going to protect your mental capital. I'm not trying to spend my mental capital tokens on a Monday inside of these conditions. What is the net positive for me? It's nothing. I mean, I could place a bet that it's going higher. I could place a bet it's going lower. If it's 50-50, I mean, to me, that's gambling. That's not being an analyst. That's just gambling. And if I got it right, then that would be a loss to me. Yeah, Mike, I mean, narrative comes with time. You most definitely have to work with it. And I've always said this is having somebody point to the narrative every single day or every single week and teaching you is going to teach you narrative quicker. And it's exactly what ICT did for me during the mentorship, is pointing to the narrative every single day, reviewing price, and that helped me learn it quicker. Because I finally understood, like, oh, this is what I'm supposed to be looking at. I know there's a huge emphasis on not caring about narrative. I mean, I don't want to go into negativity, but I see a lot on social media recently of basically you can trade every single day, you can trade in any range at any time, and I think that's just such bad advice. It's terrible advice, man. It's, to me, it's awful. I don't see the upside for that. I mean, if somebody told you, yeah, you can trade inside of this range, I mean, to me, I don't see how that would be favorable. I don't. Even if you're just going for short-term scalps and you're just doing this over and over again, I mean, on futures, think about the commissions you're having. I mean, the commissions are going to end up outweighing any of your profits. If somebody's just on a 5-second chart, just going in and out, in and out, in and out, I mean, you're going to add up those commissions and rack them up more than what you're even profiting. Will Conway, I'm not sure what you mean by that. What's up, Alex? Hoping to be lucky today. All right. Is this seek and destroy? Not necessarily, no. This is just consolidation. Seek and destroy to me is where you're really whipsawing both sides of the board. To me, it's just consolidation, and maybe on like a macro, like a 30-second, 5-second chart, this would be seek and destroy. You're taking out sell side, buy side, sell side, buy side. But excuse me, to me, it's just consolidation. I'm not trying to do anything. Past year, it's felt easy when ICT was tape reading. I mean, we only saw a few high resistance days. I saw a lot of high resistance with him last year. Personally, I remember. Time distortion. Yeah, I mean, I hate saying this. Most of you have no idea even what time distortion really is. Time distortion is a wide topic. I can show you an example of actual time distortion, and ICT's done it for us, where you've basically, you clip out a certain piece of price action. Like if I was to make this all white or all black, and then at this point, if this price moved, I was able to shift. Like if you cut this out in the editing software, you cut out this piece of price action, and I moved this piece of price action over here, you can see what time distortion really is. It's a pretty fascinating thing. Gun to my head, we're going to run for sell side in here. ES is dropping lower, YM is dropping lower. If you guys are just tuning in, I appreciate it if you haven't already. Like the video. Subscribe, I would appreciate that. Let's try to get me to 8K. Dollar index is moving higher, so that's good. So if you look at the 1 hour, if we were to move off lower, what would be the kind of areas to look for price to reach into? Well, it would be looking at discount arrays. So there's a discount fair value gap down here. Again, even if price just took off, I would feel no way about it. Because in here, it was 50-50. We broke a low. There's no fair value gap. There's nothing for me to enter inside of. So I don't particularly care what it does. That is the new week opening gap. So this is where we opened and closed. So last week we closed and opened up this week. That's the new week opening gap. New week opening gaps are fantastic. You can see here the level of respect that you have with them. So I could go short in here because that's what I'm anticipating. I'm anticipating lower prices, but nothing's confirming that to me. I don't have an entry pattern in here. And if you just look at the range that we've been in, that's, again, an indication towards you. It's probably lower probability. Do I trade turtle soups? No, I do not. I don't recommend any of you to do it. But, again, that's my recommendation and my advice. If you find them, easy to spot and you like it, don't let me deter you away from it. But I think for a newer student, I think it's, again, it's a fancy entry pattern that people can look at and be like, wow, it's amazing. But I just find them lower probability. That's my personal opinion. There is no RTH gap today. We basically opened and closed at the same price level, which is fascinating. It would be funny if it went higher. Yeah, I mean, exactly. That's why I'm not trying to push inside of here, because I don't particularly know. Ray Charter, you have an indicator? No way. I've had this ever since Kryptonite came out with it, and it's been great so far, but I would love to support you, brother, if you actually have one. Might be the best model for seek and destroy. Again, to me, there's no model for seek and destroy or consolidation. You know what the model is? Do nothing. Sit still. Like, that's the model. There's not going to be a model for every single condition. You can't trade every single condition. You can't be a participant in the market every single day. So just sitting still and doing nothing, that is your model. That's paying you. It may not feel like it, but if I took a bunch of losses, then to me the best option would have been to just sit still and do nothing. That's what's actually paying me. That's a great model. Doing nothing is always a good option. I mean, as far as what's in here, if I was to look at the sell side to see where price could go lower off of, I mean, this up close candle here would be your bearish order block, and then this small inversion there. But even though this is again the distinction between assumption and knowing, I don't have an entry pattern to go into the market currently. My assumption is that price will move lower, but I don't have something to signal me to go short. So there's a huge difference between assuming and then having your entry pattern or model confirmed to you. KUKI, I've only placed 2 trades in the last 2 weeks, and it feels good on one side, but on the other, it's so annoying. Yeah, I mean, if you look at me, I've taken 3 trades in the last 2 weeks on the live stream. I've taken some things off stream, which I'll show my entire P&L track record. I have no issue doing that, as I mentioned before. But yeah, that's such a good place. As a beginner student, it feels like, man, like it feels like you're doing something wrong. It feels like something's wrong with your system, and you start to judge yourself, and doubt starts to creep into your mind. This is the thing with drawdown and being patient when your model is not forming, is you cannot let doubt creep into your mind, because what that does is you're going to start FOMOing into positions, because that doubt, you feel like, man, my model isn't forming, there's something wrong with me, or there's something wrong with the market, so let me just go in there and push it. Let me just poke the bear. Let me see if I can get something out of the market to just reconfirm to me that I know what I'm doing. You may not think that consciously, but subconsciously that's what you're doing with your actions. Is you're trying to push inside of a market that's unfavorable. Your system tells you to stay out, but emotionally you feel like, because I'm not making money and because the market's not moving and not printing my model, that something's not good enough. So I've had this experience plenty of times. It's still, even in these conditions, that doubt starts to creep into your mind. And this will 10x itself if you're especially in drawdown, and you'll just go into self-destruction mode. So you have to be very wary of this. It's why journaling and taking notes and making sure where you're at with the market and where you're at emotionally and even with your capital is very, very key. You need to keep track of these things and know, all right, what are the certain emotions I'm going to probably start feeling? If I'm in drawdown and the market's not printing my model, I'm probably going to feel a lot of doubt and fear because I'm in drawdown, A, and B, my model's not printing. So if I'm aware of that, then I know, okay, when those emotions come up, I have to really dissolve them very quickly and logically tell myself, my model's not here, the conditions are not ripe. Yes, I'm in drawdown. Yes, being patient sucks. But the best option is to sit still and not do anything until the market becomes favorable. It starts printing my model. And that's when you can overcome your drawdown. That's when you can overcome a lot of that patience. New to Ict-Concepts, and you mentioned Turtle Soup isn't great for beginners. What would you recommend? I would recommend the 2022 model. I have a couple models on my YouTube channel. The market really only does a few things, so you don't need a whole bunch of models. I think the 2022 is amazing to start with. You need to practice that until you get that down to where you can do that in your sleep. After you become comfortable with one model, I think that's when you can start venturing out. I mean, I really only have 3 models. Maybe I technically have 4, but really I only utilize 3 of them. So you don't need a whole wide variety of models. The reason why I don't think Turtle Soup's that best, because especially for a newer student, you don't know when prices, just because it takes out sell side or buy side, just because it does that does not mean it's automatically going to reverse. The only time I've found high probability Turtle Soups is if you're taking out buy side or sell side and it's running into like a higher time frame inefficiency, it's running into a higher time fair value gap, then you could place a position on there. But for me, there's no really rules to Turtle Soup. It's just, all right, it takes buy side or sell side. All right, I'm getting into the market. So I'd recommend to stay away from that. I know there's a lot of hype around it on social media and people claiming to know what they found the secrets of Turtle Soups, but again, social media is full of garbage. If you know Turtle Soup so well and you trade them so well, why are you not live streaming? Why are you not out here on YouTube showing this? Just like I am, why are you not showing it? That's a question to be had. Thank you for being still. I was wondering if my system is a problem. Yeah, and that's for a newer student. If you don't have enough experience, you feel like, man, like something's wrong with my system. Something's wrong with these concepts. Something's wrong with me. It's, I have, let me just get in here and, make some money so I can feel like, I'm doing something. This trading thing's working out for me. But as you become more experienced, it's like, oh, it's okay if my model's not printing. It's okay if the market's not doing anything. I know that with confidence, the market will eventually print my model. If I can be disciplined enough to sit still during the unfavorable times, then I'm going to be profitable in the long run. I mean, here we could have went short because that's what I was assuming, but look at it now. We're moving higher. You could have been going long, stopped out, trying to go short, get stopped out. Now it's going long. Okay, do I go long now? Like, do you see how you could easily wreck yourself? Easily. What is the best option? Sit still, don't do anything. I'm trying to read all the chat here. There's a lot of questions in here. That's a decent question. My biz, do you think all psychological problems with trading can be reduced if you reduce your size? Yes and no. I mean, even if you reduce your size, you could still have a high frequency. I think the only way you can, help your psychological is reduce your frequency. How often do you engage with the market? I mean, if you're only engaging with the market a few times a week, you're setting yourself up for success because you're not having a lot of psychological turmoil. Again, your emotions, they can build up, they can become accumulated. So let's say on a Monday, a Tuesday, you make some mistakes, you take some losses. That, whether or not you believe it, it's going to carry into Wednesday, Thursday, and Friday. It's going to continuously build like a snowball. And if I reduce my frequency, or reduce the amount of times I engage with the market, I'm reducing that snowball. I'm watching that snowball effect throughout the week. I'm like, all right, how many times have I engaged? Have I made a lot of mistakes? Have there been some losses that I just have not been sitting right with me? Those are times when I'm like, okay, I need to just not trade at all. If I'm on a point where it takes a lot of discipline, I'm not saying it's easy, but if I can feel myself really wanting to tilt and I'm really wanting to basically gamble, I immediately know I can't trade that session. I have to walk away because, again, what's the best logical answer? Is to sit still and do nothing and just walk away from the charts. I'm not saying that's easy, but if I know I'm likely to tilt, I mean, there's probably only one option. It's I'm going to lose money. But in the gambler's mindset is, oh, I'm going to win money. I'm going to make all this money back, and things are going to be well and sunshine and rainbows. But logically, for me, there's only one answer. I'm going to lose money, and I'm going to be more pissed. Hamza, I'm sorry for pronouncing your name incorrectly. That's a really good question. How to avoid fear when executing on your model. More or less, it's just experience, and you have to do. I would paper trade a lot until you get fairly comfortable with executing on your model. And then in terms of fear, really that has to do with the idea of fear losing. And if you reduce your size enough, you shouldn't really have that much fear of entering in the market because you're not losing that much. But fear losing, it can be not just monetary money. Fear losing, that's a huge subject. I mean, fear losing could be, fear losing, your own confidence. If you lose, you don't feel as if, you're as smart as you think you are. You're not as confident. You could lose not just money, but, the respect. You lose the respect of others. You value the respect of others and how well you do in the market. Fear of losing is a huge subject. It's not always just money. It's a lot of different things in the section of losing. Yeah, if ICT was out here, you know, if the conditions were favorable, you would see him doing a lot right now, but they're not. So I'm new to your stream. What are your 3 models? I have it on my YouTube page. It's called Charter Member Models. It's probably posted about 2 months ago or so. Broken Mo, that's a great question on narrative. If the weekly is bullish, the weekly could be bullish, right? This is where people, I think, will really, nothing's happening here, so I don't care what really happens. I'll do a small teaching. If it starts to move off higher, I generally don't care. Let's say this is the weekly time frame, right? This is weekly order flow. It's bullish. But on the daily, 4-hour, 1-hour, lower time frames, you could be bearish because you know on a weekly time frame that daily time frame is having a retracement. So on the daily 4-hour, 1-hour, you could be bearish. Now, once the daily 4-hour, 1-hour, all of those time frames reach into a weekly, let's say, inefficiency, that's when you need to start, okay, now the narrative is changing back from the lower time frames back into the parent, which is the weekly bullish order flow. So understanding where you're at with the weekly and you're understanding where you're at with the daily, the 4-hour, the 1-hour is very, very key. They all work and they all intertwine with each other. The weekly could be bullish, but the daily 4-hour and 1-hour could be bearish because it's retracing into the weekly parent bullish inefficiency. Once that meets it, that's when you can start to get in line with where everything's bullish, right? Those are the highest probability areas. And narrative is a huge subject that you have to work on, and you have to see it play out over months and years. It's not something you could just pick up right away. Hopefully that's a decent demonstration of it. I missed the silver bullet. Again, man, this is not something I'm going to be a part of. Again, how many silver bullets did we all miss in here? I could have went long, short, long, short, long, short. Again, I didn't miss anything. May I please explain my new week opening gap? I mean, this is the new week opening gap indicator that I have on. I'm not sure what you have on and what yours looks like, so I don't know. So small inefficiency there with the new week opening gap. Looks like everything is starting to move higher in here. May want to target the buy side that's resting above price. So if I see something worthy of it, then I would look to target the buy side up here. Again, I don't feel any type of way about price dipping down on this fair value gap, then it moved higher. I mean, if he reeled price back at that moment in time, I most definitely could have seen a 50-50. So I don't feel any type of way about that. It's easy to beat yourself up in hindsight, but in real time, it's a much different story. Broken Mo, yeah. Ict Aiden, what's up, brother? Hope you're doing well. I was surprised you didn't chat in here. You're my #1 chatter. Did I create my own indicator? No, it's an indicator on TradingView. Amazing, Will Conway. That's great. Harold, you got to be joking, right? I hope you are. If you're not, it's the indicator here. I got you, brother. I saw your question on my YouTube channel, yeah, ICT Aiden. I mean, I live stream every day at the same time, so I mean, that's my schedule. I mean, I don't take a day off, so if I do, I'd let you all know via Twitter or whatever. Well, see if this new week opening gap, the fair value gap, can support price in order to go higher. Again, I'm not in favor of just pushing this market currently. Could very well trade right through those inefficiencies. Broken Mo. Yeah, I mean that might have. I might have to do, like I said, on Saturday. I've been meaning to do a Q&A and be able to go over questions. Hello, Gutaman. How can I join your group? I don't have a group currently. I will let you know when I do. Buy side above that high there. I know somebody asked about my fourth model. Something I'll probably just keep to myself for now. I mean, you guys have seen me use it. I mean, if I'm gonna, when I do utilize it, I'll show you. But it's technically just the last 25% of a move to a drawn liquidity. Where's my mod? He's probably sleeping. Is Vigo in here? You got his mod spot. What is a macro? A macro is a 20-minute window in which the market has a set of instructions to move towards a drawn liquidity quickly. Not always, but can happen. So a small little inefficiency in there. Again, what I'm doing is I'm drawing myself back out. During a session, especially if we start moving, I'm going to move myself back out to a higher time frame to gain perspective on what price is trying to do. If you get stuck on those lower time frames, force yourself to get back out in the higher time frame, look at price, see what it's doing, see where the closures are. Because if you get stuck on this 5 minute, the 1 minute, 30-second, I mean, you're having a very myopic view of price. Yeah, messy session. And I can't describe it in any other way. I don't feel any type of emotion about price moving. Like, if it's not within the model or the things that I'm looking for, I don't care. I can't put it any other way. For a newer student, I know it sounds weird because price is moving and you're like, man, I should be participating in that. But I don't feel a way about it because it's not within my particular, not that the model isn't there, not that I can't see that price is respecting fair value gaps and moving towards a drawn liquidity. In terms of intermarket relationships and higher time frame, it's not agreeing with what I really particularly want. So I don't care. I'm missing something. Again, look at YM. I mean, it's such a clear example this last week, few days, is YM is doing nothing in correlation with ES or NQ. It does not mean that I should change my model. It does not mean that I should do something differently. It means that I'm just following the rules and the protocols I have for myself. So if it doesn't affect your model or what you're looking for, you disregard it. Yeah, I mean, if things in terms of, let's say, intermarket relationships are not agreeing, even if my model prints, I'm not going to enter into price. I mean, you saw that with Friday. There was a clear, even on the 1 minute, you look back in hindsight, it's really clean price action on the 1 minute. But things in terms of inter-market relationships are part of my model. It's part of it. Again, just having a fair value gap after you take buy side or sell side, that's part of your model. But there's other criteria that exist within my model. And if I see YM moving off lower, doing something completely different, dollar index is not in sync, then I'm not touching price, regardless of what it does. Because that's part of my model. It's part of the rule set. Because there's going to be times when those things protect me. They help me. I mean, discipline is a bitch. There's two sides to every single model, where if you follow the rules, it's going to help you, make you profit. On the other side, you're going to have to stay out of conditions that, you know, end up moving, and you just can't participate within them. And that's just part of trading. There's lines that you need to draw, and boundaries and standards you need to have. Otherwise, you're just a feather in the wind. You're trading everything you can see. You're doing everything, but being profitable. So, doesn't this price? I mean, again, business. That's exactly what it is. If my model or my entry formed and everything was in place for me to take a trade, then I'd feel some type of way that I didn't execute. I mean, where would I have entered in price in here? Where would I have positioned myself? If you reeled this all the way back in hindsight, in here, we all could have said it was 50-50. To some people, they're like, oh, it was long, bro. Okay, cool. But for me, that was 50-50 in here. Until we moved above this new week opening gap, that's the only place and point in time I could have been like, all right, now I'm looking for higher prices. Only thing we did was reject off of the new week opening gap. We didn't dig down to the fair value gap, so there's no entry for me. We moved higher, attacking buy side. Any entries in here for me? Nope. So I don't feel any type of way about it, because there's nothing in here for me to execute on. So to me, it's a job well done. But some of you view that as if you're not doing your job, but you are. I think another thing too is, like, even if you see drawing liquidity and price gets to it and you don't enter in the market, that's still cool to me. It's still like, oh, well, at least I can see where price is going. It doesn't mean that my entry or my model is invalid. It just means that it simply didn't form. I wasn't able to get on the bus that day. But if you have an abundant mindset of, okay, these things repeat every single day, every single week, man, I don't care. Time liquidity, I never say anything but those words. I made profit, but it wasn't worth it. Interesting. Yeah, I think that's such a good paradigm shift in your trading, is where you made money, but you feel guilty. You feel like your hands are dirty. You feel like you did something wrong, right? If I just placed a long in here with no criteria to what I was looking for and I made money, to me, that's a net negative. Because eventually, if I stay undisciplined like that, it's going to bite me in the ass. Oh, there he is. Justin, you're about an hour and a half late. What were you doing? Sleeping? Sleeping on your dreams. Are you doing the Trading View Leap Challenge? Probably not. I think that's going to be a absolute gambling fest. So we've tagged the buy side there. Are you lying to me, Justin? Bye, go. No, he's been here. All right. I apologize. So you got to give your friend some shit. It's only because I want the best. So again, if you feel something about this, you feel any type of way, to me, that's, I don't mean this to be mean. It just means you're not experienced. That's all that really means to me. Because I can understand. Like, I used to be really upset on missing moves like this and be like, man, how could I have participated in something like this? But to me, it's a job well done. I didn't participate in something like this, and it's good. As I already described before, you know, where could you have entered? For me personally, there was nowhere to enter. Yes, in hindsight, I could look at this and be like, man, that's a great entry. I could have went long. But if you reel it back to that point in time, we all could have made the case for that thing going lower. So I don't feel any type of way about it. You have to remind yourself the distinction clearly between hindsight and real time, what was going on. You have to. Otherwise, there's a skewed view of what you're looking at. Yeah, there's a lot of conditions that are just, you know, right now that I wouldn't really favor. Again, if there's something in here where it formed an entry pattern, if we dropped down on this fair value gap, I would have elected to go long in here, but it didn't. So there's nothing else I would have changed. I'm not going to drop down to a 5-second chart to try to get into price. It's, to me, that's going to create more problems than solve anything. You have to get very comfortable with the idea of sitting on your hands, not doing much. It's very much a part of the career that you chose. Yeah, it will. Again, the new week opening gap, it is and I'm not saying whoever, Jake, that's, you know, that's your model. That's fantastic. For me personally, if I can have something in confluence with the new week opening gap, then I'll enter off of it. Solely entering off of the new week opening gap for me is a little bit lower probability. Now I'm looking at it in hindsight, of course. I actually see a breaker in here. Again, sometimes you miss things in real time. So you have a low, a high, a lower low, then we print a higher high. So there's a breaker there. Again, am I upset about that? Nope, because I didn't see it in real time. ES took its, yeah, I believe NQ is going to want to gravitate towards 18071. I mean, that's pretty clear. Do you think sticking to the 5-minute entries for the Silver Bullet 2022 model is a good idea? Most definitely. I think you'll miss out on some entries for sure, but it will definitely protect you a lot. I just don't think, even if you look at this run up in here, if you're not looking at a 1 minute, you're going to miss out on probably a lot of entries because it takes a lot longer for 5-minute fair value gaps to form. Sometimes they get left open because the 1 minute's being respected, but it can create a lot of rules and discipline just to sit with a 5-minute and not really tinker with the 1 minute. Because the 1 minute on the flip side, yes, there's a lot of entries, but there's a lot of losses. So hindsight 2020 every time. Yep. So again, I don't. As you move forward in your trading, you're not going to be upset about hindsight. You're going to see it happen every single day where you could have entered, where you could have done this, could have done that. I mean, you're living in a fantasy world. That's it's not realistic. Do you have a good trading psychology book? Yes, The Mental Game of Trading by Jared Tindler. That is the most highly recommended book I could give. It's very interesting to watch how NQ is just continuously pressing higher every single day in the last few weeks and just consistently making new highs. It's just interesting. It's an interesting market that, personally, even with my years of experience, I have not traded at all-time highs. And consistently, day after day, just continuously reaching for all-time highs. So, it's an interesting profile, to be honest. What's my screen size? I mean, I don't. If you're talking about the one you're viewing, it's a widescreen 32-inch. Amazing to hear, Will Conway. I may have to remake that video. That was a while ago when I made that. Are you still going to trade when you have a group or Discord? Yeah, I mean, Again, I think if you're going to pay for a mentor and they're not live trading every single day with you, or not every day, but at least they're live trading with you, I mean, what's the point of paying the money? I don't understand. Like me posting pictures, the market moves too fast for me to even call a trade inside of a Discord without me talking about it. It moves way too quickly. It take too little time for me to post a picture inside of Discord, say I'm going long here, and the market would already move. At least the way I trade. So unless you're paying a mentor that only does like higher time frame entries, then sure. But again, I think deeply why people don't live trade and they only do hindsight or just post photos. I mean, just critically think about it. Which book again? Justin, can you link that, please? I'd appreciate it. Bookmac, yeah, I mean, ICT has his opinions on it. I mean, I follow whatever he says. Again, I can't reiterate enough, like, I feel nothing about this. I don't feel any type of way about price reaching into where I thought price was going to move towards. And there's nothing for me to really get into the market, engage with it, so it's fine. Happens a lot, man. I mean, I don't know how else to put it. It's normal. Have I read Best Losers Win by Tom Hogarth? No, I have not. I've heard that's a pretty good book. Best trading book is ICT Spaces. Yeah, I think he's got some good points, but to be honest with you, I believe the mental game of trading is actually, to me, that's the ICT of psychology. So there's that buy side delivered. Again, I don't have any emotions towards it. It means nothing to me. It is fascinating to watch how the price is trading right now. We just continuously keep seeking all-time highs over and over again. Yeah, man. I mean, that's on Friday. I kind of went into a tinfoil hat about that. I mean, it is interesting to see why is this at all-time highs when everything else, when you actually look at reality, you look at gas prices, groceries, housing, everything else, it's like none of this equates to a good economy. Like why? To me, this just seems like a massive bubble. And none of this actually correlates. I think another thing too is if you feel like emotions about price moving and you're not participating in it, if you have a low goalpost, a low objective for the week, then you should feel no type of way about it because you know that it only takes a little small move for you to achieve the goal that you have for yourself for that week. I mean, if you're only shooting for like let's say 0.5% a week, 1% a week, it means nothing if price moves because you know, all right, all I have to do is get a little bit of pound of flesh this week and that's it. Yeah, elections. I mean, this year again, this year's going to be wild with elections and how things are playing out. So again, after we've reached all-time highs again, I don't know where price is going. I don't know. I mean, I can use standard deviations to get a projection, but again, I don't know how far this is going to trade. I have no idea. The only thing I could have seen was Friday's high in here. That was the last buy-side liquidity pool that we had. After we reached that, I don't know. So I'm not trying to call it top either. I'm not trying to short this. I think a lot of people are trying to do that, but to me, there's nothing technically telling me to short this. Printing trillions of dollars will do this to the market. Yeah, I mean, Federal Reserve just keeps on printing. Nico, enjoy the rest of your day, brother. Hope you enjoyed. Yeah, this market's highly inflated. I mean, it's nothing agrees. Like if the economy was good, a lot of things were well, and in the world when you looked around you, especially in the U.S., I mean, then this would make sense. But I mean, I think that artificially it's being inflated by some way, shape, or form for elections. Make people think that life is good, their 401k is good, their Roth IRA is good, everything, you know, to a, sounds arrogant, but to a 9-to-5 worker, somebody who doesn't pay attention to the world around them, all they're going to see is their 401k up, and they're going to be like, oh, life's good, economy's good, but everything else around them is burning, and they can't see that. So, again, the markets teach you a lot about life. They teach you a lot about manipulation. Federal Reserve's going to delete my student loans, yeah. So, I mean, that's probably going to be it for the session. I don't really see anything else. Again, to me, it's a great session on staying out of that opening range. Only point I could have entered, only point, was this right when we bounced off the new week opening gap. But for me, that's not really my entry pattern. I would have needed some type of fair value gap in that same area. If price came up here, reached down to that inefficiency, I could have went long. But besides that, there's nothing in here. So I don't feel any type of emotions about it. You shouldn't either. And just journal that. Any giveaways this week? I don't know yet. I'd have to talk with the team and see if we are or not. But I appreciate all the new followers and new likes. If you aren't already, subscribe. Follow me on Twitter. I can link that in the chat. I'm live every single day. So I know somebody's asked about a schedule, but I'm live every single day. Thanks for streaming today. Yeah, of course. Thank you. Yeah, if you're just new here, I mean, go ahead and type in the chat. I'd love to see new profiles. It's cool to see. Nico, no, I didn't. Yep, of course, guys. Appreciate all you guys tuning in, always being here for support. I think that's really going to be it for today. I don't see anything else. I'm not going to try to call a top in here, nor am I going to try to long it. We reached above buy side. That was my terminus. As soon as I reach above my terminus, I don't know where price is going to go. I need more information. I'm not going to continuously keep trying to press this higher, nor am I going to try to short it. So it means to sit still and do nothing. Hi, thanks for ignoring my questions. Well, that's not a good way for me to answer your questions, so maybe if you worded that a little bit better, I would. Appreciate all you guys. Yeah, that's going to be it. Yeah, am I going to the gym? Yep, I'm going to the gym. That's basically my schedule. As soon as I'm done with this session, I go to the gym. So I hope you guys all have a great day. Appreciate everybody. And until tomorrow, good luck and good trading, everybody.